What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol BBIG for Vinco or Vinco Ventures. On the left-hand side, we're looking at the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. Because we haven't mapped this one out together, let's go ahead and mark off obvious zones of support and resistance from the daily perspective. So 6 jumps off the page at me. Certainly this candle wick way up here at 940. That'll be in play in just a moment. We'll talk about why. And then underneath us, right, what else are we seeing? Certainly a floor or, prior wicks rather, here at 482, and zooming in a bit onto some more recent price history, you can see there was support here. This was a flush point at 376. Underneath that, I would argue we have this 283, and then the floor for real this time is down below here, closer to 215, kind of splitting the difference between this lower piece, this, and of course this most recent price history. So that's all well and good, but that's not really going to help us as we navigate into Monday's trading session, simply because, a large expansion of range, and if we remember, here, not a whole lot of candle structure in there. What do we do about this going forward, right? So these are great pullback areas if it does decide to turn around, but if we just go ahead and look at the 30-minute intraday perspective, take out the Fibonacci's, go ahead from our lows up to our highs just to gauge the strength of this move. Of course, the pullback into the end of the day sort of came right into the 38.2. I would argue because these numbers are so close, you should really use the candle structure instead of the 38.2. So we'll remove that and really just focus on 482 holding to remain bullish here inside of BBIG. But if we do something like this, turn on our extended hour session, that number might not even be in play either. If we just look at what's happened so far, huge movement in the post market to the upside. For the sake of today's video, we will assume that will open on some sort of gap up come Monday morning, the 9:30 bell. So for now, and again, a lot can happen between now and 9:30, but for now, we'll assume that the open is here around $7.50, and the overnight high is going to remain up there towards $7.85. This is really just to walk through how we trade large gaps up, large gap ups. And if we do something like this from the daily, if we open here and fail to take out the overnight high, right, and turn back around, go down through the open, you're essentially looking for the short back down towards the high of Friday, which is here at $6, which we also know is a structural element. So if we do get here, start to be on the lookout for hammer candles, indecision dojis, basically anything that would make you question, are we going to now see a gap fill reversal? That would be the first area where I would look out for that, but that's the framework essentially for the gap fill play. Now, if we go on over to the trade tab, it's not going to show us if this is hard to borrow, easy to borrow, or none to borrow on a Saturday, but just breaking down the options chain here, you can see that the open interest and volume is fine on the put side, so it is available to be shorted essentially via puts. I'm not saying, it has to go down. That's simply the framework that we would use, though. If it is going to turn around, that would be how you know if we do exactly what we just outlined. So the flip side of the coin is, of course, the gap and go, in which case we open here, we do something like this, consolidate, never take out that opening print, maybe form a bullish pattern just underneath 784, overnight high, whatever that ends up being. You're looking for the breakout up and over that level to take us into that 941, because as we know, there's really no structure in here, right? So all things considered, it could run, and it could run much higher than 941. The next real big area of resistance, I would imagine, would kind of be here at 10, right? That's simply a psychological number. And then after that, there's no saying how high it could or could not go. So remember, it is shortable via puts. I'm not sure what the state of shares are right now, just based on, where this is kind of trading as a SPAC. I would argue that it's probably either hard to borrow or none to borrow, but I'm not going to make that claim unless I have that information. So just know, you can do it via puts, but the long-sided trade, the momentum play, is probably going to be a little bit more attractive. So that's going to wrap it up here on BBIG. Do keep in mind the distance that we have already traveled. The real thing to watch out for is what happens with the gap, right? So keep that in mind. You have the framework, my thoughts. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.